Kim Howes is doing her daily check of some of the many thoroughbred racehorses at her agistment complex.
They're here to have a nice break, to relax their brain, to grow, just to have a break from the everyday rigours of racing. So we try to provide a nice calm environment where they can truly relax and have a holiday.
This is the Bellarine Peninsula on the coastal plain west of Melbourne, one of the fastest growing lifestyle regions in the country, where the influx of people is putting pressure on land use and land prices.
So yes, there are pressures. I think we're safe for a little while, and we certainly love living here and we love the peace and tranquility of it, but it's just reality. The houses are coming.
That's a common story, not just in coastal regions, but across much of Australia. Farmland values across the board have seen a recent meteoric rise.
It's a stunning number. The land values have tripled over the last 10 years. It's been a strong run too across the decade in most parts of the country. We track the data each year and produce a report which does look back over 29 years, and around 280,000 transactions have happened over that period of time, but it really has taken off in the last 5 years, very strong.
In a banking career spanning 37 years, Andrew Smith of Rural Bank has closely charted farmland values, and never, till now, has seen such a sustained surge.
Yeah, we saw a real supply of rural properties in those peri-urban zones around regional cities, metropolitan Melbourne and Sydney, and people looking to move out.
The bank is the agricultural division of Bendigo and Adelaide Bank. Its annual farmland value report is based on an analysis of sales of more than 40 hectares in size, the prices and locations. The report also reveals who has been buying what land.
When you look at the number of transactions that happen each year, there's certainly those larger institutional type investors who might have been buying or selling, but it's really been dominated by the family farms and in most parts of the country as well.
The pandemic coincided with a super surge in farmland prices.
If you look back over 20 to 22, we saw growth rates of over 25% per annum. It's very hard to keep up with that, and that was really playing around the country.
That escalation began with the breaking of the East Coast drought in early 2020, just as the pandemic hit, and a rare confluence of favourable factors. Almost every rural commodity, from beef to wool to wheat and sugar, was strong.
Yeah, we do see it in that way, that there's been really that element of good prices, good seasons, low interest rates and good demand as well. So confidence in the market will drive demand, and that's been very up, certainly through to 2023.
Absolutely, because people's balance sheets really strengthened in those few years leading up to the last 18 months. And people knew that interest rates were at all-time lows. So people were wanting to take advantage of having a strong balance sheet and low interest rates, so the demand for land was very strong. But over the last 18 months, it's really flatlined a little bit, but we're just starting to see it pick up again now, which is really exciting again.
Rural Bank says farmland prices softened last year, impacted by a sharp fall in livestock prices, a rise in interest rates, a drier seasonal outlook, and a fall in industry confidence. Though they still rose by 6%. And in the past decade, outperformed both the Australian Stock Exchange and the residential housing market.
We look at the ASX across the last 10 years, so as share markets moved at just on 3.6% per annum versus agriculture land at 11.6. We've seen residential property prices at 4.1 versus agricultural land at 11.6. So it is an asset class in its own right and pretty strong around the country, really.
So which regions and land types have seen the biggest rises?
If we look at the numbers in terms of that compound annual growth over 10 years, we've seen Queensland at just under 10% per annum. And so it sits there alongside Tasmania at about 9% as being just under the 10% mark. As you move through the states, we've seen Western Australia in the last 5 years just really bounce. It ran up by nearly 30% last year in 2023. Overall has averaged just on 11% across that period of time, but Victoria and New South Wales are both around 10 to 12% growth. So it is quite general across the country, and we've seen that feature where we've even had East Coast buyers buying cropping land in WA because at that point, sort of 5 years ago, it was seen as cheap considering its productive capacity.
The bank's latest data shows value for some types of rural land has fallen, though not markedly. But there has been a dramatic fall in how much land is being offered for sale.
Last year we saw an 18% reduction in the number of sales that actually took place, and that was a 29-year low.
So in short, Rural Bank says the market has plateaued after those giddy years of spectacular rises. Even so, 6 million hectares of land changed hands last year at a combined price of $14.5 billion.
There are many things that determine the value of farmland. Of course, location remains a primary factor, but there are things like the fertility of the soil, how productive that soil is and what it can grow, and how profitably, access to market, access to water, and things like climate. And we're not just talking rainfall, but also the reliability of that rainfall.
That's becoming increasingly important. Agribusiness analyst David Goodfellow has analysed historic rainfall figures to devise a more accurate method of knowing which regions have more reliable seasons.
We've shared some of this information with some of the banks in Australia, and they've really got their head around it now. And what we're seeing is that they're a lot more happy to lend to higher rates of leverage in those more reliable areas, but being a bit more conservative in the more marginal areas.
There's also increasing global interest from overseas investors, such as superannuation funds. Rob Rickard of rural firm Elders is based in Camperdown in southwestern Victoria.
And I've seen a lot of international people, in the last 2 or 3 years with the currency where it's at, starting to, to look at this part of the world to invest. I mean, it's not a secret, I don't think, around the world that it's reliable. It's probably similar to conditions to Europe and the Northern Hemisphere. So there's been a lot of sort of interest coming from around the world.
Well, still the value of Australian land is very cheap compared to the value of rural land in other countries around the world. But also we've got a lot of land here in Australia that's yet to be fully developed. So people are seeing the opportunities to buy land in Australia with the goal of one day improving the productivity of those farms, producing more food for the rest of the world, and ultimately, doing quite well for their investors.
More than a decade ago, David Goodfellow put together a multi-million-dollar land deal of some $740 million of grazing country for Paraway Pastoral, a division of Macquarie Bank. Paraway is now a leading corporate farming entity.
Well, over the last 20 years, the data that I've analysed has suggested that the average annual rate of increase, it's never in a straight line, is it? But the average annual rate of increase is over 8% per annum, and that's pretty exciting. But look, what we're seeing, of course, is the whole world is realising just how scarce a resource farmland is. We don't make any more, do we? So people who have got money to invest, particularly for the long haul, are very keen to keep investing in Australian farming land.
Of all farmland types, nationally, cropping country has been the star performer. In 3 decades of selling real estate, Rob Rickard has seen that same trend.
Our land here in southwest Vic used to be able to buy 5 acres of cropping country for 1 acre of dairy country, and now it runs pretty well parallel around that sort of, 8 to sort of probably 10,000 an acre, I would say.
Some of that growth can be attributed to productivity improvements in cropping, underpinned by strong grains prices in recent years. David Goodfellow has devised a formula to assess land value.
When you're buying cropping land, it's what you pay per wheat tonne equivalent area. So that's what you pay for enough area to grow 1 tonne of wheat per annum on average over 15 years. And that's really resonating well with good analysts.
Today, Rob Rickard is meeting dairy farmer Chris Place. The 71-year-old has been milking cows for 55 years and he's looking to scale back to pursue his hobbies. This is one of the best dairy farms in the district, but it's not an ideal time to sell.
It's got irrigation, it's got all new infrastructure as far as the Rotary Dairy, it's got a good home, and you know, something like this will make in excess of $10,000 per acre today. You know, going back probably 18 months ago, may have been 10% higher than where it is today, and that's just a result of, you know, the drier season we're having. The milk prices come off 10 or 15%. You know, all in all, just things have just become a little negative since interest rates have risen as well. So, but it's, you know, it's still pretty positive. I mean, it's as far as land values, we've doubled in the last 10 years, and that's fairly traditional as to what happens in real estate.
The pandemic also turned the market on its head. It caused a get-out-of-town effect and a rush to the regions.
Certainly south of Sydney has been an area, the peninsulas in Victoria really do stand out as areas where people were wanting to be and were prepared to pay for it.
The Bellarine is a magnificent place to live. It's getting more and more popular. There's more and more farms being broken up. So I think we're at the limit. 220 acres, we couldn't go any bigger. It's just, it'd be unaffordable.
Higher land prices mean higher rates, and that also has a bearing on land use. This used to be wool growing country. Then for a while, Kim and Michael Howes ran beef cattle, but that can be tough on a smaller acreage. So they switched enterprises to the more profitable, more intensive horse agistment and bought an adjoining 30 hectares to add to their 60 hectares.
The prices have just gone through the roof, especially since COVID. They've just taken a massive jump, and people are wanting to live in the country because they see the benefits of living in the country. But yeah, there's no way could we buy in and do what we've done with the prices the way they are. We're just very, very lucky we had the land for the last 30-something years we've been here.
So what are the downsides of high land prices? They certainly make it harder for younger farmers or new entrants to get into the business. And rising rates can force nearby residential growth corridors to sell off valuable farmland for housing.
Well, I think that's the reality, is that the world doesn't make any more farming land, do we? We make more residential land, we make more commercial real estate land, but we don't make any more farming land. So that's why people know that investing in farmland is a good investment, because it is a scarce resource that just can't be recreated.
So for those farm businesses that have gone out on a limb, taken the opportunity to expand their enterprise and paid big money in buying more land, how might they fare? Andrew Smith says it'll depend on their level of debt. But some factors, including the weather in coming months, look favourable.
Certainly interest rates maybe start to ease next year, and commodity prices have improved sort of year on year from this position last year. We have improved a bit, so hopefully we'll see a bit of stability.